Hello everyone. Thank you everyone for joining our webinar tonight. And now we are going to wait for another 2 minutes for more people to join us first. And before it starts, make sure you guys can hear my voice. If any issue, feel free to let me know. While we are waiting for others people, if you guys have any questions, you can also type in the chat box. I will try my best to answer you guys. And I saw Noor Amadi say hello and hello to you. Thank you for supporting us for the tonight's webinar. We will talk about the non-farm payroll, and then we will try to analyze non-farm payroll together with all of you guys and try to do focus some live market analysis and let you guys understand what's happens after and before the data release. All right. So now we are going to wait for another 10 seconds before we start. I hope you guys have a great night. Have a good day, a good trading journey, especially with pure crime. And yeah, without wasting any time, we are going to start our webinar right now. So before it starts, just a small risk disclaimer for you guys. The information provided in this webinar is for educational purpose only and should not be considered as financial advice. The content presented in this webinar is based on information believed to be reliable, but no guarantee is made as to its accuracy or completeness. Q Prime and I shall not be held liable for any losses, damages, or expenses incurred as a result of the use of the information provided. Trading and investing in financial market involve a high level of risk, and it is possible to lose all of your investor capital. Before making any investment decision, it is important to carefully consider your financial situations, investment objective, risk tolerance. All trading and investment decisions are solely your own responsibility. Participants should be aware of the risks involved and only trades or invest funds that they can afford to lose. And just a kind of reminder, CFD investment should be considered as a high-risk investment. So no matter you are experienced trader, you are a new trader, please have a good risk management strategy before you enter and do the trades in the market. And especially, we do have a high impact events tonight. All right. So we are going to start our webinar right now. For today, the webinar topic that we are going to discuss should be on understanding of non-farm payroll. No matter you are new trader, you are experienced trader, I think that some of you guys might heard about the non-farm payroll. And then this data, this crucial economics data should be it should be trigger a significant movement for the dollar as well as the gold market. So in tonight's webinar, I will let you guys understand what is the definition of non-farm payroll, and then I will also let you guys understand how non-farm payroll can actually affect the movement for the dollar as well as for the gold market. So in future basis, every month that you see this this data is normally will be released every month. So for new trader, for experienced trader, every month you should be able to prepare to it once you understand what is non-farm payroll. So you can decide whether you want to take risks and invest or not by your own. So this is one of the crucial things that we want to share with with you guys, which is the definition and the trading strategy before and after the non-farm payroll. And then we will also try to analyzing recent data trends. We will try to let you know what is the economic situation in the United States right now, whether the employment sector in US is good or not. And then we will also tend to give you guys a very, very small analysis on the movement for the US dollar. So let you guys have a brief understanding on what's going on for the dollar markets recently. Why is dollar drop aggressively? And then after the non-farm payroll data release, what should we expect for the movement for the dollar? And then we will move on towards the gold market as well, because dollar as well as the gold, both of them actually have a inverse relationship, which means that sometimes if the dollar going up, gold price will drop and vice versa. But of course, the recent situations for the dollar as for the gold are quite weird. Later, I will also explain the situations for you guys and do a small analysis for the gold markets later. All right. And then we will also let you guys understand why is the impact of non-farm payroll so huge and how will it affect the US dollar. And then we also link towards the interest decisions from the Federal Reserve, because this non-farm payroll data is going to affect the interest rate decisions from the Federal Reserve, which will also indirectly directly affect the movement for the US dollar. So we will also, after you understand the non-farm payroll data, after the data release and then you do your trades, right? After that, what is the things that you need to focus on next? So after the NFP data, what is the crucial thing next? So of course, we also tend to prepare you for a long-term traders. So non-farm payroll is just one step. But after that, what you need to focus. For example, you need to also focus on the inflation data and also the most important one, which is the Federal Reserve monetary policy decisions. And this is the most famous news as for now, especially after the COVID-19 recovery, inflations become very unstable. And what is the central bank is going to do? So no matter you go through all the solid investment article, news, you can notice, especially from Bloomberg and from investing.com, a lot of sources will keep mentioning that about the interest rates. For example, they will say that the Fed, the monetary policy decisions from the Federal Reserve, they actually maintain the interest rates, but they claim that they will continue to lower down the interest rates in future. This is the latest monetary policy meeting decisions from the Fed. And then after this statement come out, it will normally affect the movement for the dollar. Later, I will also explain why is the interest rate so important and then why will it affect the movement for the dollar, because this is one of the most important news in the market right now. Everyone is actually focused on the interest rate decisions from the Fed, or you can try to speculate on it, right? So this is all the key highlight that I'm going to talk with you guys. And then after 25 minutes, the NFP data is going to be released. And then I will try to focus on the live charts and share with you guys. And of course, we are not going to do the live trades, but just sharing, like after dollar breakout, what can you focus on next things. All right, so let's get started now. So the first thing is, what is non-farm payroll? And non-farm payroll is actually one of the most important jobs data in the United States. And then in order for us to understand whether the country economic situation is good or bad, we need to understand their job sector. For example, if everyone in that country are getting jobs, getting salary from their bosses, they are going to spend their money, and then directly it will be positively affect and improve the overall economic conditions in the United States or any countries. So jobs report can consider one of the most important indicator for normal investor like us to predict which country are having a very good economic conditions. That's why you want to invest in that country, and then their currency will normally go up after the economic data release. So as a comparison, when you look through multiple country, for example, you look through maybe around Indonesia and Thailand and Malaysia, Singapore, you want to try to identify the best country to be invested, but you are not staying in that country. So what can you choose? How do you choose which country is best for investor to invest? So of course, you need to choose the country that are having a very, very good economic conditions, economic growth. So by how? Actually, normally, investor will analyze by looking at the economics data. So for example, as all of the comparison between all these countries, you found that Singapore might be having a very, very best economic performance. That's why you want to invest in it. For example, you are from UK, then you want to invest in Singapore. Of course, you are going to convert your pound sterling to Sing dollar. So by that time, SGD normally will going up. This is same goes with the dollar market. If everyone are confident towards the US economy, dollar will normally going up and vice versa. So as for now, dollar drop because recent economic condition in US might not as good as expected. So this is a definition for non-farm payroll. Remember 3 key points. First point is jobs. NFP can consider one of the crucial jobs data in the United States. And the second point is job is one of the crucial leading indicator that we can be identify whether this country economic performance is good or bad. And the third point is, if that country is good, economic condition is very good, it will normally attract a lot of investors to invest on it. So when that time comes, normally their currency will be going up. Because for example, you are from overseas, you need to convert your own currency to buy US dollar in order to invest it. And put in a short term, good data, good economics data from NFP unemployment rates, dollar will normally going up. So this is how we understand on it. And then next thing is, now we are going to look through the historical trends for the non-farm for the US job condition. This data I'm using actually last week. I already generated from last week all of the economics data and try to identify what is the jobs trends in the United States. So this data will normally is from, let me see. So this data I generate from April 29 until today. So 1 week before data. So if you notice on the US economics data, you can be identified that most of the US economics data they are reading, the job sector in the United States is actually better than the market expectations. So the first thing that we are going to analyze should be on the US initial jobless claim. So for new trader, just a small clarifications for what is US initial jobless claim. So this data can consider one of the crucial jobs report in US also. So this is normally like the unemployment benefits that people who don't have any jobs, they go and claim from the government. So normally if this reading give a very, very high reading, it will be negative because it means that there are a lot of people don't have jobs in the United States, they go and claim from the government. So this should be different because higher reading is bad, but you can notice the reason initial jobs claim data is actually lower than the market expectation. So which means that this is considered one of the benefits. That's why it boosts up the optimism that NFP might be provide a good reading. And then we can also notice other data such as ISM manufacturing employments, US ADP non-farm employment change, continuing jobless claim. All of these data that green color is actually better than market expectations. But this can only increase the probability that the non-farm payroll might be give a better than expectation reading. But normally, if we are going to according to previous experience, normally even this data is good. Sometimes it will give us the surprise. For example, last time the non-farm payroll data give a lot of investors a huge surprise. So even though this data is better than expected, which means that US jobs data might be very good, but it doesn't mean 100% that NFP will be good. And because of there are tons of conditions that you need to consider. It will only increase the probability, but not up to 100%. And then you can also notice that the economy are actually expecting the NFP might be decline from the previous reading of 232K decline until 181K, which means that the job creation in the United States might be declined according to economic forecast. So as a traders, what you need to focus is, you need to focus on whether the actual reading is higher than the forecast or lower than the forecast. So normally, if this actual reading higher than the market forecast, then it means that it's still good. Then the chances for dollar to go up should be higher. And if this actual reading lower than the forecast after I think 18 minutes the data release, then things will be different. It means that US economic condition is not as good as expected. Dollar might be dropping. Then you need to shift your trading strategy. Non-farm payroll is just one of the crucial data, and of course, we do have another important data, which is what we call the US unemployment rates. So for unemployment rate, it calculates the people who are unemployed, those who don't have any jobs. So high reading means bad for the overall economy in the US. So US unemployment rates, the lower, the better, the higher, the worse. But as comparison with US non-farm payrolls, this is the job creations in the United States. So because this is the job creations, it means that the higher, the better. So you don't confuse to these two economics data. NFP, the higher, the better. US unemployment rates, the lower, the better. So NFP is just one of the data that you need to focus on, but of course, you need to also focus on another crucial data, which is the US unemployment rates. So you need to bear in mind these two is one of the crucial economics data that you need to focus on it. All right. So after we understand the overall historical data from the US, the job sector in the US still remain very good. Then moving on, we need to eye on whether the actual rating is better or not than the expectations. So after the non-farm payroll, what can we expect on it? So after the non-farm payroll, the next thing that we need to focus on should be on the monetary policy decisions. Because of course, you are not just trade on one event like non-farm payroll. You need to prepare that after non-farm payroll data release on Friday, and what is your next week trading strategy plan, or what is the next 2 to 3 weeks trading strategy plan. So after the non-farm payroll data release, right, the next thing that you need to eye on should be maintained on the monetary policy decisions from the Federal Reserve. So Federal Reserve might be coming out and give some statement saying that we can notice that recently the US inflation rate are not as good as expected, non-farm payroll might not as high as expected, US economic condition already deteriorates a lot, become worse. The central bank might be decide to be consider cutting the interest rates. So when they want to decide to cut the interest rates, the trends, especially for the US dollar, might be experiencing a significant sell-off. So this is how you analyze on it. Non-farm payroll, after that, you need to focus on what the central bank is going to do in future, which is the next week or next month trading strategy. All right. So as for now, right, we can notice most of the market participants are actually expecting the Fed might be consider maintain the interest rates. The probability for the Fed to maintain interest rates should be at 86%, which means that as for now, 86% of the traders are expecting the Fed is going to maintain the rates and 14% is going to cut rates. But it's sometimes during the FOMC meeting, the Federal Reserve suddenly decide to cut rate instead of same goes with the market expectations that they try to avoid and don't follow the market expectations. They suddenly decide to cut interest rates. Even market participants are expecting they will be cutting. Only 40% of the market participants are expecting the Fed is going to cut the 25 basis point. So if they do things like that, the Fed do things like that, dollar will normally drop aggressively. So you don't fool by this probability. So sometimes if you are a safe investor, maybe you can follow everyone because 86% of the investors are expecting Fed is going to maintain their rate instead of cutting it. So maybe the trends for dollar to go up, the chances for dollar to go up should be higher because if they don't cut rates, normally dollar will going up one. But of course, if you love risk, you don't want to follow the huge everyone, maybe you can do something that out of market expectations, that you bet against cut rates. So when this thing comes, if you are correct, you are going to gain a lot, but of course, the risk of doing this is much higher compared to you follow everyone to trades. All right, so after the non-farm payroll data release, this is going to be affected. 86% might be increased or decline, same go with this 14%. So it's not fixed one, it's not 100% fixed one. So after NFP data release, this probably is going to change. And then US Treasury yields movement also will going to move. So dollar movement will be significant also. So this is like one step by step. NFP after that, focus on the Fed rate cut decisions, expectations, and focus on the dollar. All right. So for new trader, I think you guys might be confused that why high interest rates will normally cause currency to go up and why low interest rates will cause currency to go down. This is the thing that we might be explain more detail in future webinar, but I will try to explain in a very simple way in around 3 minutes. So when interest rates, you can consider as what? As a risk-free rates, that the deposit rates. So when you save money in the bank is going to pay you the deposit rates 5%, 2%, 3%. You are going to gain the money without taking any risk because you just save in the bank, you will gain. So interest rate is the minimum risk-free returns from choosing the bank. So as comparison, you want to choose higher interest rates bank to be safe, right? Because if you choose 10% interest, like you just save in the bank, you can get 10% of the return. So you don't, and then without taking any risk. So when you are choosing the bank, if you are a global investor, you are going to choose the global bank. So as a comparison, you can notice whether you want to choose Japan to save money in Japan, which offer you around 0% or 1% of the interest, as comparison if you want to save your money in US, which offer you more than 4%. Of course, you are going to choose 4%, right? So assume global investor will normally try to pick the interest rates that higher. So normally, if the countries that have higher interest rates, their currency will be slowly going up because more people tend to save money in that bank to generate greater risk-free return, which is the deposit rate. So you don't have to memorize everything, but you just need to understand just one phrase. High interest rates, it will attract foreign capital, currency will normally go up, and low interest rates or cutting interest rates will cause the investor to shift their portfolio from the country to others country to find the country that have high interest rates. So capital will outflow from the low interest rates towards a high interest rate country. So low interest rates will normally cause the currency to be depreciates further. So this is how you link the interest rate. And of course, in future, we will do a specific webinar to talk about what is interest rate and how can the central bank decide to increase or reduce the interest rates. And then most importantly, how can we use interest rates to analyze the forex market movement, to analyze the commodities market movement, to analyze crypto, to analyze stock index movement. So we will utilize all of these important things that to share with you guys in future. So I hope you guys get a brief understanding. The next thing is what is dollar index? Normally, after Nonfarm payroll data is going to release, right, it's going to affect the movement for the US dollar. So normally you can just look at the dollar index movement. And dollar index is actually like US dollar relative to a basket of foreign currency, which including Euro, Swiss franc, Japanese yen, Canadian dollar, British pound, and Swedish krona. But you don't have to memorize all. You just need to understand that if dollar index increase means US dollar, their demand is actually much higher compared to other countries. US dollar is the most attractive currency for the global investor compared to all those major currency like Euro, like Japanese yen. All right. So by analyzing just $1 index, you should be able to understand as economic comparison, as dollar demand comparison, dollar should be the best if they increase a lot when compared to others 6 major countries. So yeah, you can just analyze the dollar index movement to identify whether the strength for the dollar is good or bad. And this is the things that will normally also experience a significant movement after the Nonfarm payroll data release. All right. So before we wait for the Nonfarm payroll data release, just a small update for your economics calendar for all of you and small updates on the live charts. As you can notice recently, right, we do have 3 major things that happens in the market. And first thing is regarding on the US economy. As chart like here, you can notice that if we ignore the jobs reports, we focus on others reports, including CP Consumer Confidence, Chicago PMI data, ISM Manufacturing PMI, ISM Manufacturing Price. Most of the US economics data is actually might not as good as expected. And then Federal Reserve member is actually have their monetary policy decisions on Wednesday. So when the monetary policy decisions, the Federal Reserve actually mentions they want to maintain their interest rates by 5.5%. But in their statement, they say that the economic condition in US might not as good as expected. The central bank might be considered to cutting the interest rates in the short-term basis. So as I mentioned just now, when the central bank say they want to cut their interest rates, normally investors will try to shift their capital from low interest rates towards other countries, right? So when the central bank say they want to cut the interest rates, the demand for dollar is going to dropping because investors take their money from the bank, invest in other country. So you can also notice on the live example, after these news were announced, you can notice the trends for the dollar is actually dropped aggressively. But as for now, the trends for the dollar already slowed down and continue to hovering the range of 104.85. So after the data release, after the Nonfarm payroll as well as unemployment rate data release, we could be expecting there should be a significant movement for the dollar. So the crucial support level that you need to eye on, maintain on 104.85. And if the data release right and Nonfarm payroll as well as unemployment rates are worse than the market expectations, dollar might be breaking below this support level, and then we could be expecting the chances for dollar to drop should be higher. Next target that we can eye on, maintain on 103.85 according to the previous low. All right, so you can notice that dollar as of now are actually breaking a very, very strong support level. And as for now, we are expecting it will test on another support level around here, 104.85. So you need to stay tuned on the Nonfarm payroll data. If really was the expectations, dollar might be break, and maybe it might be continue to drop further. So 104.85 crucial support level. But if, as I mentioned just now, right, most of the job sector in the US is good, therefore the chances for dollar to be rebound after data release should be higher because of better than expected non-farm payroll data. So if the data really come out and better than expected, dollar might be rebound from this support level. First resistance we need to eye on, maintain on 105.75. And then next week you need to monitor on any chances it's break out again or not. If it's break out, then we could be expecting the trends for dollar in long term might be forming a double top. So the next target that we can eye on, maintain on 106.70 around here. Strong, a very, very strong resistance level if dollar able to rebound back. But as of now, if you ask me whether you want to long dollar or not, it's very difficult for us to answer. But as I mentioned just now, because of a lot of people are expecting NFP is good, the chances for dollar rebound is okay, it's higher. But what if suddenly the non-farm payroll data is worse than the market expectations? And of course, dollar is going to drop a lot. But if you love risk, you can try to don't follow the market expectations and then you trade on your own. But of course, you need to bear in mind that non-farm payroll after data release, all of the dollar USD related pair should be affected. So of course, those traders who are opening trades right now, no matter, even though they don't open like dollar index or gold, they open like GBP USD, UI USD, you need to be careful on it. All right, so you need to 100% careful on it. And then normally it's advisable for you to wait until this data release. Then after that, you only slowly to analyze the market. Normally it's like that. No, because especially for the gold market, after the data release, right, it will be like suddenly drop around 100 pips and then suddenly rebound back 100 pips. So the risk should be remain high. But of course, if you love the excitement of trading, maybe you can consider it, but need to 100% remember, you need to have a very, very good risk management. Sometimes if you like fake breakout for around 100 pips, then suddenly become a shadow rebound back. So this is the risk that you need to bear. So it's still advisable that after the non-farm payroll data release, especially for new trader, you better don't enter the trades, but you continue monitoring on the charts to see any chances that, for example, gold break below the support level of 2295 or not. If they break below again, next target we can eye on, maintain on here, which is what we call the 2265 support level. So then if it's break again, then maybe it's still good for you to consider shorts, but you need to take your time. Sometimes remember, after the non-farm payroll data release, don't like enter the market straight away because sometimes it's a fake breakout. It can form a long shadow here, and then suddenly it rebound back and then going up and form a hammer. So this is a risk that you need to bear in mind. So you don't think like normally breakout strategy just break support level, you just short. No, in the case of non-farm payroll, it's different, and the chances for short breakout is high. And then you need to have a very good risk management strategy. All right. So a kindly reminder, after the non-farm payroll data release, you need to monitor on the gold support level, which is 2295 here. Is it break below, then maybe you can consider until the next target, 2265. But if non-farm payroll data is suddenly worse than the market expectations, the chances for the gold to rebound is high. First resistance level that we can eye on, maintain on 2350. So we still have another 2 minutes for the non-farm payroll data to be released. So let's stay tuned on it. I hope I give you guys a very, very good clarification on what to be considered during or after the data release. And just a kind of reminder, risk management is the key, and you don't fool by the market. Like sometimes they fake breakout, then you like FOMO, you're afraid that you miss out something, then you like just keep clicking your trading. Actually, it's not advisable because things might be just changed in 1 minute. You thought that gold is going to drop aggressively, then suddenly the candlestick will be form a long shadow and rebound back. All right, so let's focus. Maybe we can focus on 5-minute charts on the non-farm payroll data while waiting for it. I hope you guys have excitement for the non-farm payroll data trading. But my experience told me that it's really important for your risk, have a very good risk management. Now we do have another 2 minutes. Wait for the data to be released. Stay tuned on it. And you can also notice that the movement for the gold as for now are quite slow because market still don't know what will be happens towards the NFP data yet. And just a kind of reminder, it's not just NFP you need to focus on. You need to focus on multiple data like NFP, unemployment rates. These two is important. So for example, if NFP is good, unemployment rate is bad, which means it's a mixed sentiment, then you can monitor on whether it will break below the support level or not. If break below, then you only consider on it. But if NFP and unemployment rate both are bad, then the chances for it to follow the trends like rebound back is higher. All right. So if mixed sentiment, then it's better for you to wait and monitor on the support and resistance level. But both of the data show same direction is good or bad, then you can have more confidence. 1 minute for everyone to be focused on it. And you can try to see the movement for dollar already start to move around 10 to 20 pips. One minute, you can notice on the chart. As for now, we can notice the non-farm payroll data is actually much worse than the market expectations. And you can also focus on the charts, especially for the gold already start. You can see that after the non-farm payroll data release, right, both data is worse than the market expectations. Gold price rebound aggressively. So this is what I mentioned just now. Because things that suddenly out of the market expectations, those who are actually bet against, they don't follow the market trends, they bet against the big market participant portion. And when they are right, they're actually gaining quite a lot. So you can notice that the gold trend is actually increased aggressively. And then actually somebody asked about the EUR/USD. You can see that after the non-farm payroll data release, the reading is much worse than the market expectations. That's why dollar continue to plunge further and euro rebound. And then according to the charts, euro might be very good considerations for us to focus on it if this latest candlestick able to open above 1.07 40. First target that we can add on for EUR/USD maintained on 1.0805. But of course, you need to remember, even the first reaction is like that, you need to be careful whether they will form a long shadow or not. All right, so I hope this data give you a very, very good excitement. You can see that it's nicely rebound from the support level and rebound aggressively. And when these two data show a much worse than the expectation reading, this is the movement. So assume if you are a new trader, suddenly 5 minutes, you move up like 1,400 points, you will be getting super nervous. That's why I mentioned that new trader is not advisable for you to focus on NFP. Risk management is most crucial. So for those who don't love risk, you can try to avoid all of these crucial events that happens. Okay, so this is once again proof that non-farm payroll don't follow the recent historical jobs data in the US, and then the reading suddenly very much worse than the market expectations, violate the market expectations. And this is the reason why gold price increased a lot. All right, so I think this should be coming with our end of the sessions. I hope you guys experience some excitement today, and thank you. So now I'm going to open for Q&A sessions. Anything you guys want to ask me, I will try my best to answer all of you. If you guys trade and then earn some money, or some of you might lose money. For those who lose your money, you shouldn't be upset about it. Maybe you can just consider this is one of the experience. And of course, just a kind of reminder, it's highly advisable for you to don't open a huge positions during big events later. All right. So now I'm going to open for Q&A sessions. If no questions, then we are going to end now. And I hope you guys enjoy the webinar tonight. So thank you everyone for your time. Have a good day. And one more thing you need to remember, yeah, even though you see this candlestick very long, might be keep continuing to going up. Of course, it's better for you to don't FOMO. Sometimes it will suddenly form a shadow and then change everything. This is like historical experience. It's like that. So don't fool by this one big candlestick. Of course, it's still good for us to continue follow it, but maybe you can consider, if you long, you gain, then maybe you can consider to like stop loss on certain prices. You need to remember on it. All right. Thank you everyone for your support. Thank you once again, and then see you again next week. Thank you everyone. Have a good Friday night.